back in session. It's a pleasure to the board. You want to go over, do the work session now before we do the manager's comments and the board's comments?
Yeah.
Yes, please. Okay.
Mr. Chairman, we did, oh, I'm sorry, that is on the EMS, the emergency service thing is under that, isn't it?
Yes, sir.
Okay.
You want to take
Yeah.
care of that, or?
Yeah, that'll be fine. And this really comes from Commissioner Gurley. What Joe's recommending, and I agree with him, is that we change the Wayne County Firefighters Association committee member on the new Emergency Services Cost Recovery Ordinance to say that it will be the president of the Wayne County Firefighters Association or his designee instead of you appointing the person. So it's a minor change. Joe, do you want to explain that a little bit or go over it?
Well, the original intent announcement at the Firefighter Association meeting was that they would take names to bring before the appointment committee to recommend to the Board of Commissioners for an appointment. I didn't receive any. I don't think Mr. Daugherty or Mr. Cromartie received any as well. So rather than going into deeper in the weeds with it, we decided probably the best thing to do is just make a recommendation to appoint the president of the Firefighter Association, and in his absence, it can be his or her designee to keep continuity and keep the flow going.
And to be honest, when we started working on this, basically this is the way it was, but there was a reason that we didn't, and we won't go into all that.
But what this does is, with this ordinance change, is we did that by ordinance. So we're just going into section 402 of that ordinance and making the language change to say that it's either it's the president or his designee.
You don't have to have a public hearing on that?
Mm-hmm.
Okay. Is that in the form of a motion?
I'll make that a motion, Mr. Chairman, to make the name change on the committee.
You got that, Marcia?
Yes, sir.
I have a motion on the floor. Any other discussion? No other discussion. All in favor, show sign of the right hand. Motion carries unanimous. Financial review.
Mr. Chairman, Pam is going to give you the normal 3-month review through January, and then after that, I've asked her to give you an update in preparation for going into the budget session of where our fund balances are now that we have the audit in, and the impact on this year's budget. So, Pam, if you'll go ahead.
Okay, like Mr. Wood said, we're going to do this in 3 parts. The first is the financials, like I usually present. This will be for the first 7 months. The reason we're doing 7 months is because if we do it at the end of December, it has a lot of timing issues, and it's not a real good comparison because it depends on when people pay their taxes. So we like to do it at the end of January. The second part will be where I present the fiscal year 2015 budget summary and its effect on the available fund balances. That section will be on the general fund, and then we'll do it on the enterprise funds. Okay, like I said, this is for the first 7 months of the 14-15 year. This report is based on about 58% of the fiscal year. This report details the cash, the revised budget, the actual revenues or expenditures, and the percentage of actual to budget comparing the same period last year to the same period this year. The cash invested for the county as of January 31, 2015 is $105,696,651.19 and $23,850,412.51 of school funds, which are in an escrow account for the construction of Grantham and Spring Creek, for a total of $129,547,063.70. The difference is between the $105 million and the 100 this year and the $107 million last year. The cash without the school investments is about $2.1 million less, which is mainly due to the first debt payment made by the schools for the Grantham and Spring Creek projects, which is approximately $500,000. And additional expenses for the capital maintenance outlay fund of about $1 million for the schools, and they had a big project at Edgewood this year. And also sales tax funds spent for the 5 projects, which includes Charles B. Aycock, Carver Heights, Spring Creek, Dillard, and Goldsboro. So we are spending some of our cash this year. The next section on this report is the general fund revenues and expenditures. The general fund is the fund that includes the calculations that we speak of when we refer to our fund balance. All departments are included in the general fund except 911, the fire districts, capital project funds, EMS, solid waste, sewer, EMS net, and the airport. As of January 31, 2015, the revenues exceeded the expenditures by $6,504,312.57. I want to speak to this because if you'll look to the left and you'll see that we were over $20 million at this time last year, and so I want to kind of give you the reason for that. It's a difference of $14,190,747.27. I'm going to give you a little bit of detail. If I'm giving you too much, y'all just stop me. The difference in the 2 years relates mainly to the school projects that are in process in the 14-15 fiscal year. 1.1 million additional funds were transferred from a general fund type account in 113 sales tax to the capital project fund for the Grantham and Spring Creek projects. $6.186 million additional was transferred from the sales tax fund to also a capital project fund for the renovation projects of those 5 schools. $1.9 million additional was transferred from the capital outlay maintenance fund. That's where they had some fund balance in there, also to the Spring Creek and Grantham school projects this year. Restricted and committed for the public schools as of June 30th, 14 was about $15 million. So in our fund balance calculation, we had committed and restricted for the schools about $15 million. Additional expenditures, if you're comparing the expenditures last year to the expenditures this year, you'll notice there's a $12.4 million difference. It's those same monies that I just told you about. It's an additional small project expense of $1,268,519.84. This is in their small project fund. At this time last year, that's that $2 million we transferred over. They had spent that much less through January 31st last year as they have this year. They had that between $500,000 and $1 million on the Edgewood project. They also did, as you'll see later, they asked for an additional fund balance appropriation in that fund of $600,000, which y'all approved. We had a loan to Fremont of $255,244 and a loan to Mount Olive for $100,000, which amounts to, in total, about the $12 million difference. The revenues as compared to last year are down by $1.7 million. The difference is that in 13-14, we had received $1,877,000 from the Eastern Region Fund.
Hold on, Mr. Doherty.
So what you're basically saying is the major difference here is because of the schools and what we're spending on improvements at the schools.
The major difference is because of the schools appropriating all this money, the cash is going down.
Right.
And it also that doesn't mean in total the cash has gone down. They're starting to spend it. But they also moved it from a general fund to a capital project fund, which we're reporting on the general funds at this time.
Thank you.
And also like that $1.8 million we had gotten it last year at this time. Okay, now let's look at some of the tax revenues. Current taxes are $43,945,356.88. The difference in the budget, which was $45,480,693, is $1,534,836.12. And if you'll remember, y'all were asking this morning about how much 1 penny equals. 1 penny of real estate equals $696,000. 1 penny of vehicle equals about $86,000 for a total of $782,945.73. Our collection rate, as of June 30th, 2014, was 97%. So you can see with what we've collected and compared to what we're budgeted, we've collected 96.63% through January, and it's just a little bit more than last year. We have collected 88.37% of delinquent budgeted real estate taxes, and we budgeted $975,000. We have collected 63.14% of budgeted vehicle taxes, or $3,247,346.55. And if you'll remember, we're collecting on these vehicle taxes now close to 100% because of the way they've got it set up now. And we have collected $246,050.91 of delinquent vehicle. You'll see this when we get to the budget next year. We'll decrease the amount we're budgeting because our delinquent vehicles are going away. Because if you compare it to last year, you'll see that this time last year on delinquent vehicles, we had collected $611,000. So the next revenues are our sales tax. We have 3 articles: Article 39, which is 1%; Article 40, which is 0.5%; and Article 42, which is 0.5%. We've collected about 59% of budget for all the articles combined as of January 31st, 2015. The collection for July through January this year totals $9,826,639.02 compared to $9,403,705.85 for the same period the prior year, an increase of $422,933.17. That's 7 months. So the economy is improving.
I don't want to get into the weeds too much on this, but I never have understood this. If you're receiving sales taxes, why are you receiving them at different rates?
Because the distribution formula is different.
Right.
The distribution.
Yeah, I'll be happy to meet with.
Explain that one other day.
I'll explain it to you, but it'll take about 5 minutes. But basically, they're distributed differently. The formulas are different, and that's why it shows up differently here. Because you're right, the underlying base is identical.
Okay.
One
And-
other comment I would like to make, I just want to give Pam credit on this sales tax projection, because when we were doing the budget, the state was coming out with projections like a little over 4% or something on growth in sales tax. We didn't use that. And we didn't use that primarily because your finance director convinced your county manager, who was brand new, that that was too high. And she was right. And so I just want to say that, because where the state is looking at shortfalls, primarily because of their sales tax, you're not. Because if you look at that, the blended thing is 59%, and we're at 58% over the year. And that's principally because she didn't allow us to go higher than what historically you had been doing and what she felt would be here. So I just want to say that, because that's why you're not looking at a headline like the state with a $271 million shortfall in sales taxes.
Thank you, ma'am.
Thank you, Mr. Wood.
Yeah.
Now we'll just get into some specific areas. The services on aging, revenues are at 43.8% and expenditures are at 64.23%. Some of these percentages, you'll see a difference in the revenues because it has to do with timing. If y'all recall, sometimes I come up here and I talk to you about indirect cost and where we have to do a budget amendment for that. We posted those indirect costs earlier this year than we did last year, so it's causing it to be off. And that is just about the only reason. That was a $351,561 indirect cost entry that was posted this year before January 31 that wasn't last year. And you'll hear me comment on that again as we go through these. Public assistance revenues are at 53.92% and expenditures are at 54.76%. Public health. Revenues are at 44.84% and expenditures are at 49.51%. The Medicaid reimbursement for the in the 13-14 fiscal year, $764,999 made revenues higher because that was a Medicaid reimbursement that was posted, and it's not posted this year. We do have it budgeted in the original budget, and we'll receive that in the spring. Emergency telephone revenues are at 28.31% and expenditures are at 47.23%. As you know, this is the restricted money on the 911 board fund money. EMS revenues are at $3,173,754.92, and expenditures were $3,238,072.82. We do have Medicaid enhancement funds budgeted of $540,000 that have not been received yet and will be received in the spring. Solid waste revenues are $2,879,444.85. Expenditures $2,569,743.58. And that also had an indirect cost posting earlier. The sewer funds. Revenues total $178,438.02, and expenditures total $322,513.86. Sewer revenues through 1/31/15 were $177,800, and sewer charges were $198,000. So our revenues are a little less than our expenditures for our sewer. We had an appropriated fund balance of $432,668.15. This was mainly for debt service payments budgeted for the eastern region. This was moved over last year. We moved over some of that eastern region money into the sewer fund. We have not used any of it this year, but we do have the debt payments posted in there for this year. EMS net revenues are at 39.66% and expenditures at 51.01%. The difference in expenditures is a posting of the indirect cost of $107,159 this year. And they are putting a new device in one of the vans that is going to collect services right there on a laptop. It's going to be kind of like a debit card. So those services now they're going to collect before they actually do the transport. So they are hoping that will bring up their collection some. If the person doesn't pay, they're not running the service. So that is something that Nanette Sutton has just put in place.
Good idea.
The airport revenues are at 27.12% and expenditures are at 27.05%. Workers' comp self-insurance fund has a cash balance of $1,707,567.13. The hospitalization fund has a cash balance of $1,891,051.96. We do have an increase this year in our claims in the hospitalization fund. Selected county capital projects, the total spent on the radio system is $13,407,78.70. The total spent on Grantham and Spring Creek as of January 31 is $14,920,075.84. And the total spent on the central attendance Spring Creek and Charles B. Aycock is $1,013,223.35. Any questions?
Mr. Chairman, quick question.
Mr. Dodd,
On the airport,
Yes, sir.
why is that at 1.6 million this year? Why did that almost?
It's the grants, you know, they have the fuel farm grant and
So
all those,
all-
it's all grants.
Okay, good. Thank you, Mr. Chairman.
That's why the percentages are lower too, because some of them haven't come in yet.
Oh, I'm sorry, one final comment. You stated that you went and charged off this year the indirect cost, which kind of threw the numbers out a little bit. Why did we do that earlier and not wait until the very end? Because the numbers would be better reflective.
Well, we could start, you know, timing it at the same time every year. A lot of times it depends on when we get those final numbers, and I bring the budget amendment to y'all. Once we have the budget amendment approved, finance just does them. So it's.
But it would take the distortion
Right.
out if you wait to the very end, maybe in June.
And I'll put that in our policy that we'll do it every time,
Right.
same time. Okay, this first sheet I'm gonna give you is that y'all have is the general fund. And what I have done here is, as Mr. Wood has talked to y'all about, everything that begins with 1 is a subcategory of our general fund. The very last column is the total, that is the way it is reported in our audit. But in the financials, we actually keep them in separate funds. So it takes all of these to total up to the general fund, which is your last column. But I'm going to take the time to go through each one so we kind of understand where we are. 110, that first column number 2, 110 is our general fund. That's where we balance that budget. We transfer in and out of that fund. And that is where we have to decide in the end whether our tax revenues are correct for our upcoming budget. 110, our unassigned, unrestricted fund balance as of June 30th, 2014 was $33,283,443.67. This balance includes $5 million committed for the jail and $2 million for subsequent year appropriated fund balance. That means where we were in the, when we were working with the auditors, I knew at that time how much fund balance we had appropriated in the next year of that balance, so they include that as assigned. Budgeted revenues, transfers in to the general fund to 110 are $655,293.92. Budgeted revenues, $76,923,175.68. Budgeted expenditures, $84,206,543.80. Now, we have fund balance appropriated this morning that y'all approved for the detention center, $10 million. Fund balance appropriated in 110 is $2 million for the Ag Center. The other $2 million sitting over there in what we call Fund 182, and you'll see that as we go through. Budgeted unassigned unrestricted fund balance 06/30/15 is $14,655,369.47. Now let me say this is worst case scenario. This is assuming that every dollar you appropriated from fund balance will be used, which doesn't usually happen. Is everybody okay with that?
What she's saying is you typically bring in a little more revenue than you budgeted, and you underspend your budget a little bit, and so you shouldn't spend, the total impact won't be as shown here. It should be better than that. For instance, last year, what'd you underspend the total general fund? You underspend it by
Well,
what, 4 or 5
Well,
million?
revenues and expenditures were around
5 million. So the conservative numbers say it's probably going to be somewhere around 2.5 to 3 million better than what it's showing here.
Mr. Chairman,
Yes, sir, Mr. Doherty.
the question that I have was, I thought we'd already discussed as we allocated those dollars that it would bring our reserves down to 22 million.
And you're gonna see that over there. You're gonna see that, remember, that's a combined, and I'm giving to you in parts right now. When we get
Okay.
up to that total column.
You're gonna get to there, okay.
Yeah.
Yes, sir.
Thank you.
It's hard to say.
Well, the other thing I want to remind you of is this 14,665,000 is what's available to put on any capital project you may want, because this is what's left after you set aside your 14% that Ray was talking about today, which is roughly $15 million. Okay, so this is after that. Okay, so you have that $15 million sitting there to meet your reserve fund balance policy. And then this is unassigned, unrestricted that's available.
So roughly, we're talking about $29-30 million. Is that correct?
Yeah.
Okay, including the 14% set aside.
Yeah,
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 that's
if you take this 14 and that 15, you're at 29. Yeah.
Okay, thank you.
Okay, the column that says 111 court facilities, they had a restricted fund balance as of June 30th, 2014 of $439,338.33. In their budget, their revenues equal their expenditures, so you're going to end up with the same amount at the end of the year. the 439, 338, 33. There's no fund balance appropriated, there's no transfers or transfers in or out, so that will automatically give you the same balance at the beginning and end of the year. That's budget, not actual.
And those are restricted for court facilities?
Yes, sir.
Okay.
That's right.
113 is your school sales tax fund. This is where we move the money over there, they're 30 and 60%. The 113 restricted fund balance of June 30th, 2014 was $12,493,635.31. Budgeted revenues, $4,234,448. That's the 30 and the 60% that we're moving in there of Article 40 and 42. Budgeted transfers out, $9,521,371.92. Okay, that $9 million is $508,233 for the debt service, the $2.751 million that they used for Grantham and Spring Creek, and the $6.2 million that they used for the 5 schools for renovations. Then their budgeted expenditures are $4,234,448. Of that amount, $2 million we transfer over to 186, which you'll see in just a minute, for capital maintenance capital outlay. And we also have $2,423,448 in a reserve fund for them, leaving their budgeted restricted fund balance June 30th, 15 of $2,972,263.39. So yes, that fund will actually drop. So that one's going to drop because those have been moved out. Those funds have been transferred out. 115 is the Children and Youth Council. It's in here in this column because it was in the audit as of June 30th, 2014. This fund has been moved to 110. So that fund balance will be combined with the 110. There's no budget in there this year. 116, which is Services on Aging. Our unassigned unrestricted fund balance, June 30th, 2014, was $367,642.36. Budgeted transfers in, $518,534.70. Budgeted revenues, $508,086.64. Budgeted expenditures, $1,287,128.97. And so budgeted unassigned unrestricted June 30th, 2015, $107,134.73.
Pam, if I could interrupt
Yes, sir.
1 minute there. I wanted y'all to be aware, if on the Services on Aging, you'll notice they start out with 367,000. We're gonna end up at 107,000 if that's spent. So they will have used 260,000 of fund balance. So when we get to next year's budget, that's gonna be an issue
We'll be transferring more in to meet the
in from the
expenditures.
general fund. But I wanted y'all to be aware of that because the fund balance had built up, they're using it down. But at some point, we're gonna have to do, there won't be the fund balance, that we'll zero out that fund balance in the coming year, plus add some transfer, a larger transfer from the general fund. So I wanted you to be aware of that.
Your next column
So,
is.
excuse me.
Okay.
So if I'm paraphrasing that, they're overspending their revenues by $200,000.
Right.
Right.
Okay.
Was that because of the transportation costs?
No,
Not that.
it's just, that's their standard operation right now. And so basically what that's saying is, given all the grants and different things they get, you're having to put in roughly $260,000. Well, right now, you're not putting it in because the fund balance had built up, but what it's saying is, in the future, you'll have to put more of a subsidy in there.
Would the increase in their volume far as participants, is that adding to it?
Well, that's part of it, because obviously you had some increased cost because of that.
Mr. Chairman. It would even be more than that. I found out at my last meeting, which I was gonna address at the end of this meeting. They have about 50 people on the waiting list that they don't even provide transportation
Right.
for.
Right.
That's on the waiting
So-
list now.
And we'll get into the details with you on the budget, but I just wanted to call your attention to that that's a situation where the fund balance is declining, pretty rapidly, and so we'll need to address that in the budget. Okay.
Your next column is 117, is our 4-H fund. Our unassigned unrestricted, June 30th, 2014, was $815,511.41. Budgeted transfers in, $3,011.44. Budgeted revenues, $532,402.73. Budgeted expenditures, $696,214.89. Budgeted unassigned, estimated June 30th, 2015, $107,134.73. Wait, I wrote that down. $654,710.69.
I'm already confused.
Yeah, okay. Okay. 119 is was WCDA. That fund has no budget this year. Those funds will be combined with the 110. 121 is your Wayne Community College Fund. Restricted fund balances of June 30th, 2014 was $483,681.84. Budgeted revenues, $3,911,355. Budgeted expenditures, $4,393,490.64. Budgeted restricted fund balances of June 30th, 2015, $1,526.20. The community college does keep their projects rolling, so they reappropriated projects of $482,681.84 this year. And in the past, they don't spend it all, so they'll end up with about $400,000, then they'll reappropriate that next year.
So we're not overly concerned about that, because that's capital projects, one-time expense.
123 is your revaluation fund. The restricted fund balances of June 30th, 2014 was $729,967.68. Budgeted revenue equals budgeted expenditures, so your balance at the end will be the same. This is the fund that we have to build up by state law each year for 8 years, and so we are building the fund balance each year. We will not spend what we budgeted, so that amount will actually come up at the end of the year, but it is restricted. Number 126 is Department of Social Services. Our unassigned, unrestricted fund balances of June 30th, 2014 was $2,687,993.56. Budgeted transfers in, $4,552,564.60. Budgeted revenues, $14,659,180.44. Budgeted expenditures, $21,298,989.77. Budgeted unassigned unrestricted as of June 30th, 2015, $600,748.83. And that's worst case scenario also.
Mr. Chairman, Mr. Thorne, you need a little explanation there, because that's a $2 million draw.
It is. Typically, they don't spend all of that. There are a lot of programs they get money in for, and they never reach. Remember, a lot of these are entitlement programs, so the state gives them a fairly good appropriation on that, and then they typically underspend them. So if, for instance, if you were to look at the audit you just got for 14, you would see they've underspent it quite a bit.
They have remained with over $2 million fund balance for many, many years.
And so it probably
Yes.
just rolled back over.
And we use it every year
Right.
to balance their budget.
Okay.
129 is your non-board 911 funds, and these funds also will be combined with 110. We moved that into the 110 in the 14-15 budget. 131 is your health department. Our unassigned unrestricted fund balances of June 30th, 2014 was $2,219,374.73. Budgeted transfers in, $2,354,879.71. Budgeted revenues, $5,331,374. Budgeted expenditures, $8,692,485.26. With budgeted unassigned unrestricted estimated June 30th, 2015, $1,213,143.18. And this is another fund that is the worst case, and normally their revenues and expenditures are pretty much the same at the end of the year. 182, this is the cable fund that we have talked about, that y'all have committed money for the Ag Center. Our unassigned unrestricted fund balance as of June 30th, 2014 was $2,166,401.04. Budgeted revenue, 0. Budgeted expenditures, $146,860. Budgeted for the Ag Center, $2,019,541.04. That was this morning. And budget estimated fund balance at the end of the year will be 0. We're moving all the money out to the capital project fund. 185, this is your current expense money that y'all give to the schools. This is transferred straight from the general fund. 185, our restricted fund balances as of June 30th, 2014 was $527,327.85. Budgeted revenues, $19,017,994. Budgeted expenditures, $19,149,728. Budgeted restricted fund balance as of June 30th, 2015, estimated to be $395,593.85. The difference is you committed as a board to give them 1/4 of their fund balance for 4 years, the fund balance, and so we gave them this year $131,734 fund balance appropriation. So normally your revenues equal your expenditures in this fund, but we did appropriate a portion of their fund balance as it built up over a couple of years. 186 is your capital outlay maintenance school. This is the fund where I talked about it, the sales tax fund that y'all moved $2 million over for capital maintenance outlay. The restricted fund balances of June 30th, 2014 was $2,540,871.01. Our budgeted revenues are $2 million, which that's a transfer. Our budgeted transfers out $1,900,000. This is one of the funds. This is the fund they took $1,900,000 out for Grantham and Spring Creek. They had built a fund balance where we gave them $2 million, but they didn't spend it during the year, so the fund balance built up over the years. They were able to transfer $1.9 million out. They have budgeted expenditures of $2.6 million, and their restricted fund balance as of June 30th, 2015 will be $40,871.01. They did do a budget amendment and put it before y'all for appropriating an additional $600,000 for capital maintenance outlay this year. And from what I know, they used most of that money for Edgewood. They had a problem at Edgewood they didn't expect to have, and so that's what that money was used for. So that's dropping that fund balance. Okay, and now I'm gonna, all of that adds up to what our total is over here at the very right. Our restricted fund balance as of June 30th, 2014 was $17,231,925.28. Our unrestricted fund balance of June 30th was $42,270,785.63. Budgeted transfers in total $33,116,941.37. Budgeted revenues $102,347,802.05. Budgeted transfers out $11,421,371.92. Budgeted expenditures $146,968,351.89. We had a fund balance appropriation for the detention center of $10 million. A fund balance appropriation for the Ag Center. This is where you're taking 110 and 182 and adding them together. $4,019,541.04. Budgeted restricted fund balance as of June 30th, 2015, estimated at $4,596,663.72. Budgeted unassigned unrestricted fund balance as of June 30th, 2015, estimated at $17,961,525.76. So that's all your general fund sub-accounts and
Chairman.
totaled up.
Mr. Mann.
Flip back to the previous sheet. Over on the extreme right, the total general fund was $17,961,525 and change. Should that not be is that the true figure rather than the $14,655,000 that's under 110? What's the difference there?
Okay, are you comparing the $14,665,000 to the $17,961,000?
Yes, ma'am.
No, sir, it takes all of those together, all those on that row, add up to the 17,900, and that is your true general fund. Our general funds, we have them separated out because We have some of our dollars that are restricted and some are not restricted, and we have to report them that way in our fund balance breakdown, so we keep them in separate funds so that we can track them.
So our 14%, what we're talking about, the 15 million earlier, should be added to the 17,961, not the 14,655.
Well, it depends on how you look at it, Ray. The reason we wanted to break this out like this is what we're trying to show you is what is available. When you go into your budget next year, what's available for each one of these? The reason that she's using the 14,655,000 under the general fund is none of that is restricted in any way. If you'll notice the others, the 4 million, the other part that gets you to the 17,961, every one of those is restricted to a specific use. It's unassigned within that area, but it's restricted to that area.
Well, that's what's confusing, because it says budgeted, unassigned, unrestricted. So that's, I'm saying.
It is, but what we're doing there is, theoretically, we could just drop it into there, but what we're saying is, as those people underspend their budget, we're leaving that money in there. And it particularly matters with health and DSS. So the money is available. You're correct. That additional money is available with those other 6 columns that's available, but we're earmarking it for those specific areas.
Okay.
Does that make sense? But it's unrestricted, unassigned within those areas.
The red are unrestricted, unassigned by statute. The blue are restricted by statute. You've got two lines there. Your total of 4,596,000. You'll see that that's mainly for courts and schools and Wayne Community College. Those are restricted. We can't spend them.
Once you gave them that appropriation, it's theirs. They just haven't spent it down, and so she's keeping it on the books, but it's already restricted there.
Okay.
Does that help?
Yeah, it does, but one other question, Mr. Chairman. I'm getting there, okay? In 116, 117, 119, these other items that's added to the 14 million to make the 17,961, wasn't some of those actually as shown as losses? Wasn't a couple of these figures actually losses?
No, sir, they weren't. They didn't have
Were
losses.
they all?
No, sir, because you start out at the top, you see they're unrestricted, unassigned at, like, 116 is 367,000.
Yeah, well, what's really throwing me for, I guess you have to read this thing completely different than my financial statement. I'm used to seeing, if there's a loss anywhere, I'm used to seeing the parentheses around it.
Well,
Okay, and I can't find that here unless I
well,
do
the purpose of
math.
this report was not to do an income statement.
Yeah.
This is a statement of fund balance. So what we were trying to do here was show you, now that we have the audit, because remember, when we do the budget, we estimate how we were going to end the previous year. So we estimated where we would be at June 30, 14.
Okay,
This top column now is, those aren't estimates anymore, that's the audit.
okay,
So we wanted to give you the actual audited figures, fund by fund by fund. And then say, if the budget went exactly like it's written, where would those fund balances be? So as Pam has said repeatedly, each one of these is worst case.
So it's budget, it's not a true loss yet, it's just budget. That's how much, the deal is the amount of fund balance we appropriated in these funds.
So what we're trying to give you here is a snapshot of where we're at, and if the budget went exactly as planned, where we'd end up, so that y'all see what our available resources are as we start talking particularly about this master facilities plan and the things we're facing there. But it was also to show you the impact of what would happen when you fully budgeted for the jail, and then you put another $2 million in for the Ag Center.
thank you.
And again, just to reiterate what Pam said, is so when you get to the far right column, that's the general fund, all of these collapse into the general fund on the audit, and that's the full audit, okay? But you'll notice we had closed 3 of these funds at the end of 14, and all of that money then went into the general fund. And as we've sat here and talked with you today, in all likelihood, services on aging won't have much of a fund balance when we get into next year. Okay.
Thank you.
And the next spreadsheet that I handed out to you are the enterprise funds. Okay, Fund 622 is our EMS fund. And let me tell you, even though it may be unrestricted net position, but all these funds are restricted. So, I mean, they're not, you can't move money out of these funds back to the general fund by law. So these are restricted, but this is like unrestricted within the restricted fund net position.
See, excuse me, Mr. Chairman, I say I've never quite understood that. So you're telling me that these are their funds they've got available that's in their reserves, but we can't take any of that money out?
It's for the purpose that you set up that fund for.
Is that right?
So we don't, basically what we're
We're
saying
gonna
is,
have a lot of trash moving or something here.
so basically what we're saying is, if you've got money set aside for the airport fund, we leave it there. If they underspend their budget, we leave it there.
Do we have to?
Not
Unless-
totally.
Oh, well, okay, that's all I wanted to hear.
If you're in bad financial condition.
In other
you
words,
don't
we
wanna
may
be-
have the solid waste make a contribution to the Ag Center? Yeah. Oh, yeah, he's all right with that.
Well, you could do that. I'd want to have a conversation with you before.
Okay, go ahead, I'm sorry. I digress.
Yeah.
And I want everything signed off on before y'all do that. Okay, 622 is the EMS fund. Unrestricted net position as of June 30th, 2014 was $118,703. Budgeted transfers in, $2,362,318.39. Budgeted revenues, $3,578,162. Budgeted expenditures, $5,956,243.39. Budgeted unrestricted net position as of June 30th, 2015, estimated $102,940. The difference in that is we did appropriate fund balance of $15,763. The next one is the solid waste fund, 624. Unrestricted net position as of June 30th, 2014, $1,645,126. Budgeted transfers, $20,768.49. Budgeted revenues, $4,035,639. Budgeted expenditures, $4,274,002.49. Budgeted unrestricted net position as of June 30th, 2015, estimated to be $1,427,531. The next column is your sewer fund. Unrestricted net position as of June 30th, 2014 was $611,433. Budgeted transfers in $573.60. Budgeted revenues $300,000. Budgeted expenditures $764,249.66. Budgeted unrestricted net position June 30th, 2015, $147,756.94. Now, let me remind you here, we had some of the Eastern Region money come in, so that would have been included in your beginning balance. And we also budgeted $303,750 as a loan payment out of the sewer fund, which we haven't used that money yet. So that depends if y'all still want to move
Right.
forward with paying that
But
loan
that's
payment out
also
of
for the
there.
full amount, right? So we don't need to do that much in 1 year.
That's 1 year, so I'm like,
Okay, all right.
Mr. Chairman,
Mr. Kamar.
Mr. Daugherty brought, well, maybe I not miscategorized, but he brought some attention to the solid waste fund. Was that because there was $1 million sitting over there?
Oh, yeah, anytime I see $1 million laying around, I get it.
Well, and I would just look across the line. Is that would one say that anything over $1 billion looks a little excessive to be sitting there
Well,
unless it has a specific purpose?
It depends on the fund. Solid waste fund, you can drop $300,000 on a piece of equipment out there. So to me, 1.4 million is not excessive out there, because it really depends on, one of the things I have the staff working on is a 10-year fleet replacement schedule. So until we complete that, and I see where we're going with the equipment out there, I wouldn't touch any of this. Because, like I said, you can spend $300,000, $250,000 on another piece of equipment.
Yeah, and that's a rough, I don't say it's a rough, but it is yeah, I could, those big pieces of equipment.
Their stuff is
they're
theirs is big ticket items.
Big ticket items in there.
They got some $1 billion pieces out there.
Yeah, they're.
And we also
they're-
have post-closure requirements that we
Yeah.
have to meet, and those
Yeah.
sales
Well,
and
I
all
went on
that.
cross over there to the EMS net fund.
Well, EMS net is positive, but if you look at the EMS fund, there's very little. And so the non-emergency medical transport actually makes a little money. EMS, you're having to subsidize quite a bit out of the general fund. So if you actually put those together, there really wouldn't be that much. And again, you can spend quite a bit of money on those ambulances, depending on what you have there. So again, I wouldn't look at doing anything there till we get this fleet replacement schedule going out 10 years and take a look at it.
And we are estimating that you will use some fund balance in there this year. I'll go through that 630 EMS net now. Unrestricted net position, June 30th, 2014, $1,730,881. Transfers in, $6,171.58. Revenues, $1,302,206. Budget expenditures, $1,590,942.58. Budgeted unrestricted net position, June 30th, 2015, $1,448,316. And the last fund is the airport fund. Okay, I'm going to explain this a little bit. I had to take this apart because within the audit, they have deferred revenues of $341,294. In your enterprise funds, we had to defer the revenues where the Eastern Region funds were brought in here, and so they're deferred at $341,294. And then our unrestricted net position is $360,500. So those are two components of that beginning balance. Then our budgeted transfers are $41,194.30. Budgeted revenues, $1,113,088.38. Budgeted expenditures, $1,654,827.81. Budgeted unrestricted net position as of June 30th, $201,248.87, and that is worst case.
And again, that 341,000 from the Eastern Region, remember, was to do capital projects out there. So that's intended to be spent.
Okay, then we'll go to the total column of our enterprise funds. And just remember, each one of them separate, so I'm giving you the total just to see what your enterprise funds are. But they can't be swapped between and all. Deferred revenues, $341,294. Total unrestricted net position as of June 30th, $4,466,643. Budgeted transfers, $2,431,026.36. Budgeted revenues, $10,329,095.38. Budgeted expenditures, $14,240,265.93. Budgeted unrestricted net position as of June 30th, 2015, $3,327,792.81.
So again, what we wanted to do was to show you where we're at going into the preparation of next year's budget. And what we do is just what we've been through, is we look at it fund by fund by fund. Because we start off with where do we think that fund is going to end up, how much reserves do we have before we start looking into the budget, and whether or not we're going to appropriate any fund balance on those that are, and just to remind you, the general funds, the reason she segregated them is all of the general funds are done on modified accrual accounting. And that's why they use the term unrestricted fund balance. But on the enterprise funds, they're done on full accrual. And so what the remainder is unrestricted net position. And that's basically the assets minus the liabilities, and then you take out any of the equity that's tied up in inventory and things like that, and fixed assets. So
Right,
it's
and you-
basically what's spendable that's left.
And you also book your depreciation.
Right. So that's a good snapshot of where we're at. And that's all we wanted to do today, was to give you a snapshot with the actual audit numbers of where we're at.
Any other questions? Thank you, ma'am. County manager's comments.
Okay, Mr. Chairman, I'll keep them brief because it's after 5, but just wanted to say that we have started the budget process and the CIP process. The CIP documents are due in from the department head shortly. We do intend, as part of this process, y'all had asked that I look at every position in the county. One of the things that we'll be providing to you, it won't be in the budget, but as work papers, is we will have a schedule of the personnel in each department and by division. And what we're going to do is give you a chart that has a 24-hour period of time going across, and then every employee on a typical day, and that will show you how each employee is assigned to work so that you can see that. Then the second sheet that you'll have is then on a typical 28-day cycle, those same employees, when are they scheduled to work? So for instance, if somebody's an 8 to 5 employee, the first sheet will show their name, their position. It'll show 8 to 5 colored in. And then on the second sheet, what it will show is 5 days a week, Monday through Friday, 8 to 5, they'll be there. But on Saturday and Sunday, they won't. So, and that becomes particularly important when you start looking at the schedules on EMS, 911, the Sheriff's Department, because there you're going to see that we have to schedule shifts 24 hours a day, 7 days a week. And so that's why it takes a whole lot more people in those shifts. But I think by giving you those charts, it's going to give you a much better understanding of how that scheduling is done and how many people are on each shift and why on each operation. The second thing we're doing is we're developing a 10-year fleet replacement schedule. Now, when you get the CIP, it only goes out 5 years. So the first 5 years will be put into the CIP. But in order to really do a good fleet schedule, I think you need to go out at least 10 years because there's some equipment won't get replaced for 8 or 9 years. But you need to take it into account in providing that schedule, because the bottom line is what we really want to do is make sure we can take the fluctuations out of that from year to year as much as possible and make sure we've got everything planned in a useful life. So we've developed some useful life schedules on that, what the odometer readings are now, and then taking that across and seeing when it starts to hit that useful life, what year would that need to be replaced, and then what do we replace it with. And we're going to try to standardize a lot of that as well, and with the cost on that. So again, those will not be in the budget because it would make the budget far too big, but we will be providing that to you as work papers as part of the budget and then walking you through all of that. The other thing I wanted to mention is that we have Veteran Service Office. As you know, our Veteran Service Officer resigned. We have interviews scheduled pretty much all day tomorrow. And given the weather, I hope we can get those in because we want to make a decision soon on And the only other thing I wanted to say is, it is my 1-year anniversary, and I just want to thank y'all, and I've enjoyed working with you. It's been an interesting year.
Good way to describe it. Is that it?
Yes, sir.
All right, commissioners' comments. Mr. Gurley, you want to go first?
I will. Like other commissioners, we all been busy with a lot of functions the past couple of weeks, but I was able to attend the Sheets grand opening on the 5th, and it was exciting. I had a good crowd on that cold day out there. And as well as the other commissioners, I attended the courthouse security survey conducted, and it was quite interesting and very detailed. And the Carl Best Ag Leadership Luncheon last week was great. It's great to see Corporate Extension and Wayne Community College teaming up and partnering up and encourage our young leaders in the agricultural world and enhance agriculture for Wayne County, because it is very vital and important to Wayne County. Jetport Advisory Committee met, and for the new members, did a review of the Jetport projects, and then began a roadmap for the future with more details to come at a later date here. And also the Wayne Memorial Hospital Board met, and then the background preparations with staff planning for update of the Wayne Memorial Hospital Surgical Suite, and they're in final preparation days for the upcoming Joint Commission survey. Thank you, Mr. Chairman.
Mr. Mayor.
I also attended on February the 5th, the courthouse security survey, which was held over at the Sheriff's Annex. And the North Carolina Courthouse Security Manual, which is published by the North Carolina Sheriff's Association, we had a presentation, and the assessment that we did for Wayne County, we also discussed improvements that we could put in place at the courthouse to protect the citizens and judicial employees and law enforcement. It's amazing the detail. That book was that thick, wasn't it, Joe? There's a lot of detail that has to be paid attention to keep everyone safe in this courthouse. I also attended the Carl Best Ag Leadership class at Wayne Community College, and of course our county manager did a great job in being the keynote speaker there, showing the organizational chart of a county and what our responsibilities are. Also, I was at the Jetport Advisory meeting that Commissioner Gurley was at. I would just add one thing, that the fuel farm is in operation right now, and there's miscellaneous work being done, so hopefully somewhere in the near future that'll all be cleared up. Attended the meeting of the Wayne County Board of Health meeting, and I need to put in a plug for the Board of Health to the citizens of Wayne County. This is a advertisement, if you will. But as you know, there's been a lot of publication and news media about vaccination of our children, and the Board of Health has put out a it's not a report, it's a information, and I want to read this to you because I know it's late in the day, but I do know people from maybe be looking at us on television. But the title of this is "Vaccine Saves Lives." With measles making a comeback in the U.S., it is important to make the public aware of the importance of getting vaccinations on time. So far, no cases of measles have been reported in North Carolina this year. North Carolina ranks best in the nation, third best in the nation, for measles vaccination for preschoolers. North Carolina law requires 2 doses of the MMR, measles, mumps, rubella vaccine to attend school. According to the CDC, 20 million people worldwide contract measles every year. North Carolina children are not allowed to attend school, either public, private, or religious, or a child care facility until they have received all vaccinations appropriate for their age. However, NC law does provide for two types of exemptions. There must be a valid medical or religious exemption. Wayne County Health Department provides childhood and adult vaccines. Many of the childhood vaccines are provided at no charge through the Vaccine for Children's program. No appointment is needed. Vaccines are a most successful and cost-effective public health tool that helps prevent communicable disease outbreaks. These vaccines are safe and highly effective. The Wayne County Health Department does educate the public about vaccine changes and updates through the school health nurses, public service announcements, print media, and by our community partners, which are Wayne Memorial Hospital, private medical providers, Wish Clinics, Watch, Wages, and all child care facilities are monitored by the Child Health Services team to ensure children are being vaccinated. So, with all the news media about vaccinations, they in fact do work. They in fact are safe, and we certainly encourage all parents to get their children vaccinated. Also attended the NC East Alliance meeting in Greenville, and there was after going over quite a few items of the budget and so forth, one of the key things that we did, which we spent about 45 minutes on, is that the NC East Alliance passed a resolution supporting the emergency dredging of the port of Morehead City. I don't know if you've heard about it on the news or not, but the normal depth of the port of Morehead is 45 feet. However, the most recent soundings by the U.S. Corps of Engineers recently, there's a departure draft of 36 feet on mean high water and a maximum departure draft of 33 feet on mean low water. In addition, vessels entering or leaving the port can only be scheduled during daylight hours at the discretion of the pilot. Here's the key. This port is very important to not only coastal counties, but to all of eastern North Carolina and beyond. Let me give you an example. The port serves a wide array of industries across the region, including large companies like Potash, one of the largest producers of fertilizers located in Aurora. Others like Bridgestone up in Wilson, tire manufacturer, employs more than 2,000 at its tire manufacturing operation in Wilson. Spirit Aerosystem here in the Global Transport, and Nucor, who's a high-tech steel mill in Cofield, are all customers of the Morehead City Port. Here's the key. Listen to this. The 10-foot reduction in channel depth, which means that the ships have to light load, that's what they call it, light load. They can't put as much cargo on. Potash is losing $2 million per month because they have to light load to export the fertilizer. Now, having said that, we passed the resolution, but on the very next day, on the 13th, I attended the Highway 70 and 17 Quarter Commission meeting in New Bern, where Secretary of Transportation Tony Tata, he explained, and this is one of the things he explained, I actually talked to him over on the side. He has found money. You know, he has found money for all this dredging from the state level, and the money's there. And he was upset about costing these industries this kind of money. He said, if I have anything to do with it, somebody's going to be in there dredging in 2 weeks. He was upset about it. So, but his main reason for going to New Bern was to explain the $2.5 billion bond that Governor McCrory is asking for transportation and building project, which about 1.2 to 1.4 billion of that would be for additional highway projects. So overall, it's been a busy week, but the key is that these sports that we have in Wilmington and Moorhead, someone needs to take the initiative to make sure that these sports are the depth they should be, and not let it get so bad that industries is losing this kind of money. That's all I have, Mr. Chairman. Thank you.
Mr. Doherty. Sorry about that.
Over the last 2 weeks, it seems like I attended a number of transportation meetings. NCDOT and Highway 70 in Raleigh to get an update. Chamber meeting at Lane Tree with Secretary Tata. MPO meeting and a joint Highway 70, Highway 17 joint meeting in New Bern. On a personal note, occasionally we take this job and we say, well, do you really affect anything? Well, last week I saw that actually I feel like that we in this board had some effect, because Secretary Tata outlined what this board outlined some 2 years ago in regards to an economic engine for Eastern North Carolina. And in his plan, in his vision, and as he explained it on his board table, underneath his glass, every day, he looks at a map in regards to Moorhead and Eastern North Carolina. And that vision is building out Radio Island to where you had container ships coming in and offloading directly onto a rail, and that rail leaving and going from Moorhead at a new route going 101 up to the Transpark, and at the Transpark having an inland port where all of that is offloaded and distributed on a highway system that included Interstate 70 and Interstate 795, bringing jobs and growth to Eastern North Carolina. And to hear him out of his mouth state that that is the governor's vision, that is the vision that they are pushing for, it felt good to feel like that we were accomplishing something. The last point I want to make, and that is that Secretary Tata indicated that there were problems with the strategic formula and that they would be addressed, and that they are addressing. Things in regards to points being given for a military base, but you didn't get any points unless the highway went right to the property itself. But that a region around that installation should be given points for highway improvements, and on and on and on. But they are looking at that, and hopefully that will come back to us for the next round. Thank you, Mr. Chairman.
Mr. Bell.
Mr. Wood mentioned part of my presentation, and that is the budget, the fund balance for the council on aging, so I won't address that anymore. And I did mention about, they do have a transportation problem. They have about 35 to 40 people on the waiting list now. But I do have a question about the large room in that facility over there. The Koalas wanted to rent that room one day, and they told them no, because that was our rule up until now. And what I need to know, is there a way that they can rent that room and take the funds from that legally and use it for transportation? I don't know. I told I would check it out.
We could look at that. I don't think there's any, unless Borden tells me something I'm not aware of, I don't think there's a prohibition against you renting it out.
Yeah.
You've just had a policy of not doing that.
Yeah, that's right. They only have one night a week that they can do it, and that's on a Saturday night, so all the other nights are busy.
I think, as long as it doesn't interfere with the services on aging, if the
Yeah.
facility's there, I don't see a problem with doing that.
She says she could take that money if it's legal.
Right. Put
And use
towards
it for transportation, yes.
Right.
And have it designated.
Okay.
You wanna make a note?
We'll take a look at that.
Okay.
I think that has some merit.
And I have some good news. I went to the Sheets open house, ribbon cutting, and I found out that Commissioner Joe Doherty wants to be the chairman of the committee for Special Olympics.
I love you, John.
Is that all you got? That's it. Hey.
Just about skipped me. A couple of things about the board of directors meeting. We had a presentation by Wilma Carlisle, and they went over our financials, and they all look good. Mickey, I told you I've got copies if you want to see it. They mentioned the Highway Trust Fund, and on a federal level, will be out of money by May 30th of this year. That's a real concern for all of us. Mentioned that George Holden's on the Ways and Means Committee, Children's is on the Ag and Vet Committees, which is a good thing to hear. You do have to go to the ethics training. If you're elected or appointed in 12 months, you got to go. Matter of fact, they're doing one in New Bern today. You might be a little bit late though. Of course, you can do it as a webinar too, so that help you out. They also said, spoke a little bit about the Union County case with the school system, that the appeals were filed and the arguments that have already been heard. And the judge indicated in that hearing that the school board should have submitted a full request and reasons so that the county could plan. And they felt that appeared to be favorable the way the judge was looking at those. Sheriff Annex, we went over there for that security training, and it did show a few things that lets me know that we got some work we've got to do. I had to leave early that day because I had a works meeting, and in your packet of your information, there is a proposed. Go ahead. Okay, I was good. Proposed phase plans on what they're going to do with Advanced Manufacturing Center. So you can take a look at that. It's going to take.
I had an opportunity to, as part of traveling about, invite that last, I think on the 5th, between, it was 5 and 7, and I think my good friend here was out there. I also had an excellent opportunity to spend some of the time. I didn't see all of it, but the sheriff had the security, it was the sheriff taking care, and the other one hospital planning, I'm sure, before this board, as you all requested some. Just as a side note, my colleague here mentioned we have to attend the ethics training after we've been re-elected or elected. But I thought after our last meeting and we reaffirmed or had something put in our own book about ethics, I thought maybe that would give me a waiver. And I said, give me a waiver. We'll get more thought than we did. That's sir.
I just want, I gave you a look and what, there's about 300 information.
Mine was $500 to special 10 minutes attended video meeting. I went to the meeting and was provided to send dinner on Thursday. After Wood week, I had a and mentioned in the sea farmer. In fact, I'm in the county now. Also, on the 11th, went out to the chamber with transportation with on a little issue. Also on the 12th, I attended the Interfaith Center, radio opening or not. First one last night because of, hold on. That, Mr. Bell.
I have one final thing, doing the mobile home about, and either Commissioner
Remember what there is. Some, as far as the houses, knowledge there is absolutely.
I will, and come.
and I'm,
Did I having a school board?
Yes.
Yeah.
Oh, I really know. They sat down. I ain't family to sign it right here.